It's official. The Great Resignation as we knew it is over, and it's important for you to understand this because you want to know how the job market is transforming. That way you can win with your career, with your income, and your wealth. The Great Resignation was essentially if you don't like your company, if you don't like your pay, if you don't like the policies, you can quit, find a new job which has better pay, better policies, and a better lifestyle. That way you can do something that you like and make more money. But what we're starting to see happen is a big shift in the job market. And for you to understand the shift in the job market, I want you to understand what has happened over the last few years to bring the job market to where we are today. Let me start with what we saw happen in 2020. 2020 was the year of unemployment. This was a strange year because people were getting paid more in unemployment to sit at home than they would have if they went to work. People were making money from unemployment checks and stimulus checks, and in a lot of instances, strangely, people were making more money by not working than they were by working. 2021 was when the Great Resignation really became popular. A lot of people were now being called back into work, and this is where people said, I don't like my company. I don't like my work policies. I don't like this career that I have. I don't like the pay that I have. I don't like having to go into the office. I don't like something. So you saw a lot of people start quitting their jobs and finding better jobs, potentially with more pay or better policies or better lifestyles. And now you saw this massive movement of people quitting their jobs and finding new careers. We continue to see the Great Resignation continue into 2022, but it also transformed into the Great Renegotiation. The Great Renegotiation is people saying, I want to stay at this company. I kind of like the policies. I kind of like the job that I have, but I'm not happy with my pay. And everywhere else, people are able to make more money, so please pay me more. So what we saw happen in 2022 was a lot of people were able to renegotiate higher wages. We saw some of the fastest wage growth ever in 1 year in 2022, partially due to the inflation, although many times this wage growth didn't keep up with inflation. But on a purely income level, we saw incomes rise very quickly in 2022. And then of course came 2023. And in 2023, although we still saw some people quitting their jobs and some people renegotiating their salaries, it wasn't to the same extent that we saw in 2022 and 2021, partially because we were seeing the economy start to cool down a little bit in 2023, which is why partially we saw 2023 as more of the year of quiet quitting. Quiet quitting is where people are not happy with their jobs or their lifestyle or their work, and so you would go to work but not really put in 110%. Maybe you'd put in 80, 90, maybe 100%, but in a lot of instances with quiet quitting, you're just kind of going to work to do the bare minimum without really trying to excel or do an exceptional job. You're just trying to do enough to not get fired. But now as we're entering 2024, you're starting to see this trend shift as well. Take a look. Number one, you're seeing pay raises slow down, you're seeing bonuses get cut, and you're seeing some companies even asking for employees to return their bonuses. Number two, you're seeing starting salaries go a little bit lower because companies are having to be a little bit more competitive. They're having to cut back on their costs. They're not making as enough money. And so one of the ways that they're cutting back is by offering lower starting salaries to new employees because they just can't keep affording paying the previous salaries that they were. And of course, the cherry on top, number three, which is jobs are slowly becoming less available because companies are starting to see changing tides in the economy, and so they're not hiring aggressively like they were before. Now, if we zoom out and try to project what might be coming in 2024 and beyond, let's take a look at what happened. That means in 2020, 2021, and 2022, the power was in the hands of the employee. Employees had more power. They were able to quit their jobs. They were able to find better paying jobs. They were able to negotiate better pays. But then they started to flip in 2023, and now here we are entering 2024, and you're starting to really see a lot of changes where employers are not able to pay as much. They're cutting back on some of their jobs. They're cutting back on some of their bonuses. They're cutting back on some of their salaries. So you're starting to see a major shift. But what triggered this shift? And the trigger goes back to our friends at the Federal Reserve Bank, because this is exactly what the Federal Reserve Bank wanted. Why? Because the Federal Reserve Bank has been working to fight inflation. What are they doing to fight inflation? One of the things that they're doing is raising interest rates. What is the impact of the higher interest rates? Well, one of the impacts of the higher interest rates is it is more expensive to do business. Because if you own a business and you have any debt in that business, the higher interest rates mean, number one, if you go out and borrow more money, it's going to cost you more money. It's going to cost you more interest. And number two, if you have existing debt, well, corporate debt is not a 30-year fixed rate mortgage. Many times this corporate debt is a 2-year, 3-year, 4-year, or 5-year debt that readjusts. And so now, if you're a corporation and you have existing debts, like many corporations do, and this debt is readjusting at significantly higher interest rates than when you originally had it, that means your expenses are rising while sales are not growing the way that they once were. Why are sales not growing the way they were before? Because, well, inflation has made it so difficult for people to even afford their regular expenses. The higher cost of living means you have to pay more money for your housing. You have to pay more money for your groceries. You have to pay more money for a vacation. You have to pay more money for your health care. Now, when you have to spend more money on all these things, not to mention the new student loans that you have to pay as well, you have less money to go out and buy things like a car or a fancy new watch or other things that you want to buy. And so if people are spending less money, that means businesses are generally making less money. And if a business is not seeing growth in revenue and they're seeing rising expenses, partially due to inflation, partially due to the higher interest rates, that puts businesses in a tougher position. And this is where now businesses are starting to make their changes in the job market, in their hiring, in who they keep in their employees. And this is where I want you to understand this because, well, if you have a job or if you're an employer, you want to understand how the job market is changing. That way you can best take care of yourself. There are only two ways that a business can increase its profitability, which increases its chance of staying alive and growing. Number one, it can increase its revenue, or number two, it can decrease its costs. Now, how do you increase your revenue? One option is you sell your stuff for more money, but during a time where people are already struggling to spend money, you can see where that could be a problem. This leaves option number two to increase your revenue, which is increase your productivity out of each employee, out of each worker. Because if you can increase your productivity, that means you can make more money off of each worker. Now, hold that thought because I want to talk about number two. Number two is you can reduce your costs. How can you reduce your costs? Well, one of the ways that companies can reduce their costs is by letting go of some of their employees. This brings me now to a big trend that you're seeing happen in the workplace, in the job market, which is the return to office mandate. Now, why are you seeing more and more companies saying that you have to return to office? In fact, I was just reading an article on CNBC which said that about 90% of companies in the United States are going to be implementing some sort of return to office mandate by the end of 2024. Now, there's two reasons why companies will issue a return to office mandate. Number one is to increase revenue by increasing productivity, or number two is to reduce costs. Now you might hear that and say, wait, how are you going to reduce costs by asking employees to come back into the office? You got to pay for more rent, you got to pay for more things. Well, let me read you the headline of that same CNBC article. Why return to office mandates are layoffs in disguise. According to workplace experts, companies are daring employees to quit. So what does that mean exactly, that these return to office mandates are layoffs in disguise? If you were a company and you're seeing this bloated staff, you're seeing this bloated employment count in your company, and you would need to reduce some of your costs, and you want people to be more productive, who do you want working for you? You want the people that are extremely dedicated, that are going to do anything that they need for your company, and it's an easier way for you to let people go if people choose to leave by themselves, because if you're a company and you have to issue layoffs, you might have to pay severance to a lot of people. That can be expensive. Versus if somebody chooses to leave by themselves, now you don't have to worry about paying that severance. So now if you issue this return to office mandate and some people say, you know what, I don't want to work for this company anymore because I don't want to have to go back to the office. I like being able to go to the gym at 11. I like being able to take my car in at 1 p.m. I don't want to have to go back to the office. I quit. Well, now the company doesn't have to worry about paying that severance. Now, I'm not saying all return to office mandates are bad, but you have to understand the mindset of why some companies are issuing the return to office mandates. Some of them are trying to increase their revenue because let me tell you, there are some benefits to some companies for being in the office. Other companies, not so much. Like for our company, Briefs Media, we are returning to the office in 2024. Why? Because when you're a startup and you have all this creative juice happening, you need everybody there together because everything is so collaborative. Everything that you do is collaborative. You have meetings all the time. You're talking about a lot of things all the time. So there's a lot of benefit as a startup to be in person together because you're constantly working together. But if you're just pushing things on Excel, and you could do this from your home in Aruba, your home in India, your home in Mexico, or your home in Arkansas, or your home in New York, it doesn't matter. And this is where now you got to understand what's going on in the job market. Because some companies now do need to increase their revenue. For some companies, being in the office together is a way to be more collaborative. It is a way to increase revenue. For other companies, it's a way to decrease their costs because it's a way to lighten their workload. It's a way to lighten their employees without having to pay severance. And what we're seeing happen now is that you're seeing more and more companies do this. And what does that mean that's happening? Well, we're seeing a shift in the job market because companies are seeing everything going on. They're seeing what's going on in their financial statements, that they're not making the same money as they were before, or they're not seeing the growth in revenues that they were before. And they know that, well, if we let you go, that's actually better for us. Or that, hey, we know that the opportunities are not there like they were before, so you might have to be a little bit more of a harder worker at our company if you want to stay for us because, well, we need more productivity out of you. And this is the shift that you're seeing happen in the job market, which is why you want to build your financial education. Because, well, if you rely on your job, that's fine. Nothing wrong with being an employee. Nothing wrong with being an employee. Nothing wrong with being an employer, but you have to know how to build your wealth as well, because the reason why so many people get upset is because they rely on their job to fund their lifestyle. And then they want their job to also give them their dream lifestyle. And so now when you're relying on your job to fund your dream lifestyle, you make money to drive a fast car, you make money to live in a big home, you make money to have these nice vacations, and you don't have to work on your boss's schedule, and you don't want to have to work on anybody else's time. You want to do things the way you want. You get stuck in the cycle where you have to work just to make your payments. And then if your company takes away some of those lifestyle benefits, you feel stuck because you want all the lifestyle, you want all the money, but you have no assets to protect you. When in reality, freedom, let's talk about freedom. Financial freedom comes when you have enough assets to fund your lifestyle, period. It doesn't come from you making a 6-figure salary. It doesn't come from you making a 7-figure salary. It comes from you owning the assets that pay for your lifestyle. I don't care if you're an employer, I don't care if you're an entrepreneur, I don't care if you're an employee, it's the same model for everybody. Until you have the assets that can fund your lifestyle, you got to keep producing your income that we can keep buying more assets. Now the problem is most people, especially in America, most people have no assets. They don't even know what an asset is. They say, well, what should I buy? What should I do? And this is where you have to start building the financial education, because we're going through a shift in the job market. We will see a shift in the economy. People will get hurt financially. And then you're going to see more people angry and upset. They're going to hate the corporations. They're going to hate their boss. They're going to hate the government. They're going to hate banks. That's going to happen. But this is where I want you to be proactive, understand what's happening, and start to build that financial education, build that financial preparedness. That way you can be the one that can capitalize on investment opportunities when they come your way. Now you might be wondering, well, Jaspreet, what do I do? How to start building that financial education? If you're one of those people that is looking for more resources on how to start investing, how to start building those assets, what do you start doing? I have a ton of videos on my channel you can start watching for free. And my team at Briefs Media also put together this awesome ebook. It's called How to Build Wealth as an Investor. And you can read this ebook for free as well. We created this as a resource for you. It starts with the basics of how do you build a mindset of an investor, to how do you start saving your money properly, how do you save your first couple $1,000s, to how do you start investing your money, different ways you can invest, how do you generate cash flow, to then going into things like how do you spend money smartly, how do you earn more money, and how do you protect your assets. This ebook you can download for free. If you want to get a copy of this ebook, all you got to do is click the link down in the description below or go to briefs.co/ebook. With every economic and financial and job market shift, there will be winners and there will be losers. The people who are winners aren't just the people that get lucky, it's the people that understand what's happening, that are prepared, and that are educated. And if you want to be one of the winners that is going to win in this next shift in the job market, because we are seeing shifts happen. I forgot I took out the timeline. We are seeing shifts happen. If you want to be one of the people that win, you got to be the one of the people that's working to build your financial education, that's working to build your financial preparedness, because your wealth is built not through your salary. I don't care how much money you're making. I don't care if you're a doctor. I don't care if you're an NBA player. It does not matter how much money you're making. Until you own the assets, you will never be truly wealthy. And that's where real wealth is built. It's through your financial education. It's through the investments that you own. It's not just through your salary. Your salary is a conduit that allows you to own the assets, but you have to know how to go out and buy the assets. You have to know how to use your salary the right way. And that's the financial education that most people, unfortunately, were never given. And this is where I want you to start investing some time and money in the financial education. That way you can start building your true financial freedom. The United States of America was already facing a major retirement crisis, but now it looks like this retirement crisis just got worse. Take a look. Social Security beneficiaries will receive a 3.2% raise in 2024 as inflation moderates. Now, at first glance, that might sound like a good thing because that means Social Security checks are going to be bigger,